consumer loans are growing at a faster pace than overall loans. An increase in credit card loans, motor vehicle loans, and salary-based general purpose consumption loans are fueling that growth. So what do these all mean for our credit markets? With us now for more is Peter Faulhaber, President and CEO of leading global information and insights company, TransUnion. Good to have you here, and congratulations, Peter, on your recent posting.
Thank you so much. Pleasure to be here.
So that's 3 months into the role and
That's
6
right.
years of Philippine banking experience via
That's right.
HSBC. What are you seeing in the consumer appetite for credit?
Well, as you alluded to in your opening, bank lending continues to grow. And that's both supply and demand. So banks are looking to lend more. They're looking to get more Filipinos into the formal financial credit system. And Filipinos are also looking for ways, to borrow money. So whether it's for a salary loan or whether it's for education or even travel, the demand is still quite strong.
And that's all happening as we're seeing the global policy uncertainty unfold and midterm elections to boot. What impact might those event risks have had in the propensity to embrace credit?
Sure. So what we're seeing at TransUnion, and just for your viewers, TransUnion is a private credit reference agency, right? So our goal is really to enable trust between borrowers and lenders so that they lend prudently and borrowers also borrow prudently. We're really seeing quite positive sentiments, actually. We recently launched a credit perception index where Filipinos have a more positive view of credit than they did in 2023. Now, that's actually a unique survey that we launched first here in the Philippines. And soon, hopefully, we'll bring that to more countries.
Yeah, I was just trawling at the CPI, the survey that you mentioned. I wanted to show it on the infographic, the current attitudes and how they're shifting with their preference, given the inflation concerns.
Yeah.
And month on month, I did make a mention that inflation is tapering off to at least 5-year lows. But then when you look at cumulative inflation, it's still at record highs. So what impact do you think this is having on their want to actually seek credit or a loan?
Sure. Well, our Filipino customers tell us that inflation is at the top of their list in terms of the concerns that they have. So not only do we have the credit perception index, we also have the consumer pulse survey where some of those sentiments are coming out. So even though inflation is at a 1.4%, I think in April at a 5-year low, the concern about rising prices is still at the very top of Filipinos' lists.
Right, but then it's interesting also when you take a deep dive at what we're seeing right now on screen, the expected spending increase.
Yep.
So Filipinos are spending on clothing and electronics
Yep.
to the detriment of dining out, entertainment, travel, white goods, and digital services like Wi-Fi connectivity. I mean, I can't live with Wi-Fi.
Yeah.
Cannot. But then they're spending less on that. I mean, what can you draw out from these findings?
Sure. So as you can see on the graphic, I think in-store and online retail shopping is going to grow quite rapidly. I think that speaks to the certainly the rapid digitization of financial services that we've seen certainly in the last 6 years that I've been here. I think key especially for Philippines is 70% of the GDP is consumption, right? So every time you go out and about, the malls, restaurants, it is still quite busy. We still have a few months to go until the Burr months start, and I'm still quite confident that the spending will continue to fuel growth.
Right, consumer attitudes is just one because there are other metrics that the survey tracks, and pretty interesting. Included in that is knowledge, trust, favorability, and future receptivity.
Yep.
So when you compare us with other ASEAN nations, how are we doing then?
Yeah, I think, and we'll be able to deep dive more on the survey in the coming weeks. We'll do a formal launch of it also, I think, which would be quite interesting for your viewers. The Philippines has a ways to go, I think, in terms of the credit perception as well as education. So while it is increasing, there is still a negative perception around credit and borrowing. And so what we try to do at TransUnion, and we don't lend money, we're not a financial services company, is we try to help our customers, which are the financial services companies, lend prudently to consumers, right? At the right rates, with the right limits. Similarly, help educate those consumers on what's the right amount to borrow and why, the importance of credit scores. So I think that education still is a way to go, but it's a really big focus for TU in the Philippines because we really want to help
financial
inclusion and really get more people into the formal financial system.
Especially when there is access, because that's one of the findings as well, that Filipinos have gone into the buy now, pay later scheme because it's so out there, it's so available. So how do you change the mindset then that borrowing is one, paying is another, as you say prudently?
Yeah. So, and the graphic on buy now, pay later, shows that the top reason for Philippines is it was easy to apply, right? But I also think that the buy now, pay later product fits great with how Filipinos shop, love installments, love to split purchases into more than one payment. So I think the product fits quite well. I think the prudent thing is for BNPL, it's how do we make sure that that the lenders, right, have the right data around the right consumers, so that customers are not, unknowingly taking out too much debt, right? That they're not unknowingly buying for things that they can't afford. And that's where the data and insights of where TransUnion comes in, because we want to make sure that the country grows, and consumer growth, spending growth is a great way to do it, but it needs to be done prudently by both the lender and the borrower.
Just as a final point, Peter, because the other side of credit really is paying it back prudently. Yeah. With the Bangko Sentral reducing rates a lot more towards the end of this year, what are the risks then of household debt ballooning, mirroring the problems that Thailand and South Korea face?
Yeah, sure. So with rates coming down, it should make actually borrowing a little bit cheaper, right, as banks reflect that in their pricing. So if that flushes through the system, then it should actually be a little bit cheaper for Filipinos to borrow. Now, the risk, as you point out, there is we need to be able to repay that regardless of the amount, right? And that's where we can use really targeted data, so the banks are lending the right amount at that lower rate, which then makes it easier for consumers to actually pay it back. So I think that's probably the best way for us to manage it.
Great. Looking forward to a deeper dive on the data. Thank you so much, Peter.
Thank you, Kathy.
Appreciate it.
Pleasure.
And Peter Faulhaber joining us here, the President and CEO of TransUnion.